We're going to be discussing the global playbook operating across EU, US, and Asia. If you guys want to come on out.
Okay, we're good to go? I think so. So welcome, everybody. Thank you very much for your patience and endurance to hold out to the end of what's been a very intense first day of Paris Blockchain Week. My name is Mark Foster. I am the EU policy lead for the Crypto Council for Innovation. We're a premier global alliance working in the digital assets space. It's a real pleasure to introduce my expert panel here to have a chat with you about the global regulatory outlook, where things stand, there's some of the opportunities and challenges, and the road ahead. So what I'm going to do is I'll quickly explain how we're going to run the panel, try and keep it exciting, given this time of the day. I'll let the panelists introduce themselves, tell us a little bit just about their companies, who they represent, and the regions that they're working in. Then we're going to go around the world, so a little bit about what's happening in the EU, a little bit about what's happening in the APAC region. I'm going to talk a little bit about US from a regulatory perspective, and then we'll let the other panelists kind of come off the back of that, and we'll have a few questions. We'd like to try and leave some time for questions of the audience as well, if people are still awake at the end, and we're keeping you from the drinks reception. So without further ado, let's kick off. To my right, please, Rocío.
Thank you so much, Mark. Well, thank you all of you for being here today and also for giving me the opportunity to be a speaker at Paris Blockchain Week. My name is Rocío, and I'm part of BANXA team. So what we do at BANXA, we are a crypto infrastructure provider offering ramping services globally. So we hold licenses all over the world, and then we are registered in multiple jurisdictions. So I hope I can contribute quite well about the operator view today, and also with the regulation stuff. Thank you.
Perfect. Thanks. Lex?
Yeah, my name is Lex Fisun. I'm the CEO of a company, Global Ledger. We do blockchain analytics primarily for AML and cybercrime investigations. So we do KYT, which is Know Your Transaction, and KYB, which is Know Your Business. This means banks and financial institutions across Europe use us to check on incoming source of funds of their clients, but also on where money going after the withdrawal has happened.
Perfect. Ajinkya, please.
Hi, good afternoon. My name is Ajinkya Tulpule. I'm the Director and Chief Operating Officer for HashKey's European arm. HashKey is a digital assets group based out of Hong Kong, and we operate multiple lines of business, including regulated asset management, regulated crypto asset exchanges, Web3 tokenizations, and then cloud services. Thank you.
Perfect. Last but not least, Ivan.
Hi, everyone. I'm Ivan. I work for a non-profit called the European Commission. So we propose legislation, essentially, and I'm our team lead in the digital finance unit. I look after MiCA and the DLT pilot. Good to be here. Thanks.
Thanks, Ivan. And like any good panel, we will defer to the public sector first. So I'll let Ivan kick us off. Ivan, obviously, the EU has been one of the first movers in terms of legislation in this space already. Can you maybe just give us a quick overview from your perspective in terms of how we got to where we are today, where we are, some of the opportunities and challenges that you see from, and the Commission sees from a kind of regulatory perspective in Europe, and how that works internationally?
Yeah, sure. Thanks a lot. So where we are, we've adopted MiCA some time ago already. So since mid-2024, the part of MiCA on stablecoins had been in application. Then in 2024, the part on CASPs, so trading platforms, brokers, all the rest. And we actually have now in a few months the kind of the so-called grandfathering clause. It's a very legal term, expiring in MiCA. That means that you can't operate anymore under a national regime in Europe. So you have to now, at this point, in a few months, get a MiCA license. So we do have now this European playbook for crypto asset markets coming in online fully, which is great. I think, in the last kind of months and a year, there's been a lot of work on our side on kind of regulatory supervisory convergence. That has been mainly done by ESMA and EBA, so the Securities Markets Authority and the Banking Authority, which both have competencies on MiCA, on stablecoins or on CASPs, together with the NCAs. They've been kind of, whenever you have a new piece of legislation coming online, obviously there's going to be loads of questions by the market on how these bits and pieces apply and what does this mean and what does that mean. So we've been issuing a lot of Q&As, which kind of authoritatively then interpret that legislation. That's been keeping us busy. On MiCA, one of the kind of big things, the big developments lately is also that we've recently proposed to move the supervision of all the CASPs essentially from member states to ESMA, which it's a fairly big ask, and it kind of comes in the early days of MiCA application. But although the logic is quite clear, although we have a unified kind of European rulebook in Europe, you still have 27 regulators interpreting it, and that kind of creates sometimes a difficult regulatory area to navigate for businesses. So if you have ESMA, as a single supervisor, we feel like that's going to be better for the market. That's currently being negotiated, so it's only in the proposal. We'll see, what ends up being as adopted as legal text. So that's a bit ongoing. I would say on MiCA as well, we have a kind of regular review slated for 2027. So we are already working on a public consultation to kind of scope out a bit, take an early temperature check of MiCA, how it's been applying on the ground. Also ask questions about stuff that's not currently covered by MiCA, notably lending and borrowing, DeFi, and these kind of things. So that's on the MiCA side. I mean, the way we often look at it is, you have kind of two things in Europe. You have MiCA, which is crypto asset markets, and then, you have the MiFID stuff, as we call it, which is financial instruments, transferable securities, derivatives, all of that stuff. So on that front as well, we've been quite active, where we put out quite early on in, I think it was 2023, already entered into application this so-called DLT pilot framework, where we kind of invited, the trading venues and the central securities depositories, so those that deal with, issuance and settlement of assets, essentially the post-trading stuff, to be able to apply in this kind of flexible framework where they can get some derogations from the law to be able to kind of better integrate and more easily integrate DLT into their operations. So that's that's been a moderate success, I will say. We had 6 applicants so far in this DLT pilot framework, and which is kind of maybe, we see much more interest currently in the market to tokenize stuff. So we felt that we really needed to upgrade that framework. So we also put out a proposal to improve that framework, essentially kind of increasing the scale, the scope of the framework, and as well, considering some other kind of market structure adjustments to better accommodate DLT. So that's a big kind of construction site for us that currently is being considered by the council and the parliament, and we'll see what comes out of it. But we're very excited about that.
Great, thanks very much. Yeah, a lot going on in Europe, and I'm sure there's going to be a lot of interest in the consultation on MiCA from our members, and I'm sure a lot of people in the room. Ajinkya, can I just come to you for a similar kind of question from, I know you operate a lot in the APAC region and in MENA as well. Where are we there in terms of the regulatory regime? To what extent perhaps has some of the different jurisdictional rules been inspired perhaps by what the Europeans did earlier on? And what are the challenges that we're facing now and next steps, please?
Yeah, thank you. Thank you for that. And thank you, Ivan, for your comments. Well, what we've seen in Asia is obviously we don't have an Asian Union. So you still have national governments and countries implementing national laws based on their own respective national interests and priorities. So you do find countries and jurisdictions in Asia still having some kind of a forking between what they would like to see and how they would like that to be implemented onto their respective regulated entities. Overall, Asia has been far more cautious in certain aspects within the crypto and digital assets sector. So one example is, even before MiCA, even before any other jurisdiction thought about it, the Japanese regulator, the JFSA, required all VASPs or crypto asset exchanges to hold at least 95% of customers' crypto assets in a segregated cold wallet and not mixing with corporate crypto assets. This is before anywhere else in the world. So when the FTX collapse happened, the only FTX entity that did not lose its customers' funds was a Japanese entity. And that kind of goes to show how forward-thinking and ahead they were in that sense. There are other examples as well. I mean, if you look at Singapore, if you look at Hong Kong, if you look at Southeast Asia, they've been very, very careful on who they let through the doors. The due diligence performed on the applicant firms, the members of the C-level team are very in-depth, are very strict, and they do require you to, and they do hold you to very high standards. So, mistakes or misleading statements are an absolute no-go. Even if you have a little bit of a wriggle room, you think you might have that, but they are very diligent to point out, well, that's not what you said when you applied for your license, and this kind of interpretation is not acceptable. So please go back and fix it immediately. They also have no problems handing down fines or what's called business improvement orders, where they can stop the entire business for what may seem to some other jurisdictions as not a major infraction. What we are seeing, though, and that's what HashKey has been involved in, is we are seeing some regulators coming together for a joint supervisory model, and this is pretty unique. So HashKey was quite instrumental in having the Middle East regulator from Dubai and the Hong Kong regulator come together and have an MOU for the joint supervision of crypto asset exchanges that are authorized and licensed in both their jurisdictions, and to enable them to then play with a shared order book, an order book that is shared by two separate entities within the group, or can be outside, but two separate entities, two separate licenses, two separate geographies, two separate continents, but jointly supervised by their respective national competent authorities. This is a first in the world, and this for me, quite honestly, this is where the world's going to go. This is the direction we're going to take, because as a business that operates across borders, trade barriers or financial systems or regulations, as if they try to divide that cross-border world too much, we will have to find a way to make the regulators talk to each other a bit more and enable that cross-border business. So that's, in a nutshell, the situation in Asia.
Perfect. Thanks very much for that. We can't do a global regulatory panel without touching on the US. We don't have a US representative on the panel, so I'm going to abuse my position as moderator and just give you a bit of a flavor about what's happening in the US. My colleagues at CCI are working closely over there. I mean, I think there are three things that we see a lot and would signal in terms of recent historical developments in the US. Obviously, a new administration brought a new approach. This administration seems much more open than the previous administration, and that has seen a kind of mindset change, actually, because whilst we have a rules-based approach in the EU and maybe a more enforcement approach in Japan, in the US, it's more a principles-based approach with less of a focus on legislation. And I think a lot of the changes that we saw both in terms of personnel but also signaling from the SEC in particular and the CFTC have created a bit more of a momentum for this industry, and definitely we've seen things over the last couple of years start to develop and thrive a little bit more. Whereas previously there wasn't any certainty, and the EU obviously brought around a regulation and legislation that gave certainty. The US over the last years has caught up quite significantly in that respect. And then, of course, there is still a legislative aspect to this as well. The Genius Act was passed through Congress last year. That is a framework which gives a regulatory regime for stablecoins, essentially. Slightly lighter touch, I would say, than perhaps the EU regulation in terms of some of the reserve requirements. But that's also seeing market developments over there. And we're in the process now in the US with the Clarity Act, as it's known, in terms of market structure, bringing around some rules around digital assets, CASPs as we call them in the EU, but also AML rules and kind of prudential rules as well. So lots of things going on in the US as well, and why these kind of collaborations and discussions, both public sector and private sector, are really important as we think about how these jurisdictions can kind of connect up. Which brings me over nicely perhaps to the other panelists in terms of the operating environments that you're operating in. Maybe first, please feel free to just give us a bit of a flavor in terms of some of your experiences on the ground, where you're working, and some of the challenges perhaps too.
So I mean, as an operator view, as I mentioned before, like the challenge in operating across the European Union, US, and Asia is not demand, because demand is there. So the challenge that we have is execution across fragmented regulatory regimes, payment rails, and also compliance expectations. I mean, we have a message, that emphasizes BANXA. I'm not sure if you've seen, if you go to the website and if you know us, it says one network, local everywhere. So meaning that local ramp and licensing, compliance, and settlements, they are into one infrastructure layer. So this is what we try to build. BANXA licenses, we have MiCA license as CASP, we have FCA, we have also in the US, we have Austrac, FinTrack, plus 40 licenses, so we operate globally. And we partner just recently with Gates around the US market access. And also we partner with Ton and Polkadot. So yeah, we have that global overview. And also we see where we are fragmented, in terms of regulation and payment rails, and how we need to unify all the layers.
And what's your experience? So obviously you said you got lots of licenses there, and I suppose one of the challenges as the industry matures and develops is the kind of the admin burden and the cost side of all of this. And ideally, I think where we'd like to get on the public sector side is to have more coherence and consistency internationally. Exactly. How are you kind of like thinking about that as we move forward? Are you positive about some of the collaborations that you're seeing between the international standard setters and some of the public sector, or do you think it's still going to be a continued kind of fragmented market?
I think it's going to take a bit of time, but the problem is like every jurisdiction mature in a different way. So this is what we see. So Europe with MiCA is more regulatory clarity. US is still moving toward federal market structure. And Asia is advancing via selected hub rather than one single framework. So, I mean, in my opinion, I think it's going to take a bit of time, but we are there, especially adoption, and trying to build, the layer, between the two ecosystems, the Web 2 and the Web 3.
I think that's a sign of the maturity of the ecosystem now as well, because my background is in traditional finance and policy, and I think we're getting to the space in the next few years where we're starting to talk about, kind of international coherence, standard setting, which is a lot of the kind of the conversations that the traditional finance, the big systemic players talk about when they're operating in multiple jurisdictions. So I think that's quite positive.
Yeah, I mean, just to quickly add to that, I think actually internationally, I mean, you got the big standard setters like FSB and CPMI IOSCO for financial market infrastructures, and then the Bank of International Settlements. I mean, they moved in quite early, I felt, and so especially FSB, they put out minimum kind of standards or recommendations for both global stablecoins and crypto asset markets in general. BCBS, has its standards as well, and crypto exposures when banks deal with them. CPMI IOSCO as well did some work. So in that sense, I feel like we have a kind of lodestar that we can kind of globally work towards. And I mean, we in the Commission have been always a big supporter of these international standards, and we've been diligently implementing them as well. And I think FSB took stock, I think in October last year, a bit, how this kind of global implementation of standards has been going, and it's a bit patchy. It's still, I think for crypto asset markets, you had 60% of jurisdiction either having something on book or kind of planning on adopting something. But in stablecoins, it's actually much lower. So there's clearly still some work to do, but we're getting there.
Yeah, and of course there's the FATF work and the OECD work as well in terms of the CAF framework. So a lot of things going on. It is right that we should mention the international standard setters were quite quick out of the blocks there. So now it's about making sure it all joins up to the extent possible. Lex, can I bring you in? From your perspective, what are you seeing in terms of how your business operating environment is developing, some of the collaborations that you're doing on the public sector side, but also cross jurisdictions? How's that?
No, we have a lot of work, especially in this environment where we have problems with funds from Russia, sanctions, Iran situation going on. And as a company that labels every wallet and every transaction, we are cursed with knowledge of what is really going on there. And I mean, recently we did a research on Iranian funds going to Europe. Before we did the same on Russia, also working with the Sanctions Commission in Europe for that. And we can do like a little statistics exercise. So if you look to a person on your, is it left, right? And then you can look at these people, like look at them, because you will get an insight right now. Like you can look at the person on your right. So that makes three of you, right? A person on your left, you, and a person on your right. So statistically, two of you accepted money from Iran this year. And maybe the third one accepted money from Russia. So, and the amounts are not joking amounts, really. So about 6 billion, this is this year so far, about 6 billion went from Iran to European licensed entities. These are like fintechs, these are crypto exchanges, these are payment systems and things like that. And it's not, there's a little overlook really in the industry in terms of like, is it direct exposure, is it indirect exposure? I mean, direct, indirect is very important in like TradFi when you analyze, but in crypto, anyone can make indirect exposure if it wants to, and it costs zero. So, as I said, like 2 out of 3 accepted money from Iran and unaware of it. And you're kind of safe right now because your regulator may not also know, but it will eventually find out because it's in the blockchain, it's there. And you'd better be the first to find out. And why this is happening? Why like 6 billion from Iran? Only from Garantex, which is a very sanctioned Russian exchange that was like shut down. That's great, but in the last year of operations, their volume was 16 billion. And again, like about 7 billion went to European entities or from European entities. These are very big amounts. And why this is happening? Because of 2 reasons. Oh, it's basically one reason, right? So compliance is very expensive and very slow. Where cybercrime and money laundering after that is actually very fast and very cheap. It costs nothing. So for fraudsters from North Korea to create a bunch of wallets and move money in seconds, hopping through wallets, DeFi, whatever, cross-chain, it may cost them $10 and commission for move like 3 billion. Where for compliance officers to uncover the scheme, to analyze all of that, and that may cost a fortune, and they may not even have time for that. It might be a pile of requests that needs to be done, and this transaction just can be allowed because other risk factors seems to be okay, because it's a drop account of a 86-year-old lady apparently moving a couple $1 billion in USDT. So
that's not a red flag at all.
It's definitely. So in general, the operating environment seems like it is a lot of work for us, and we do help compliance teams to become fast and cheap in the same way fraudsters are fast and cheap. And what we also do is we do these yearly annual reports for people to just check up on the compliance, just to make sure they didn't lose anything, they didn't overlook anything and things like that. So you can look for the year like a regulator would look into you, not just the wallet level of analysis, but just see if something got missed and things like that. And just in general, the regulations are already sort of good. Like we probably don't need any more regulations and stuff. We just need a little bit better implementation, optimizing costs, and just not to become the TradFi that everyone hates, which is very slow, and people don't like TradFi for that. Crypto was very fast. It was very appealing, and TradFi can also become very fast with crypto.
Thank you.
Yeah, that's an interesting point, right, Lex? And one thing that it reminds me of is, during my time at the FCA as a former regulator now, I remember that the FCA used to receive a copy of every trade and transaction that used to go through its regulated firms within the UK. And then it had a quants team inside the FCA applying quantitative analytics to that data to try to detect exactly that, suspicious activities, suspicious transactions, and then they would match it against the reports coming in to see if the firm identified that same transaction and detected that as being suspicious or not. And if not, then a question would go back, why was this not reported to us as an STR or an SAR? So one thing that we are seeing is there's a lot of data now being generated within the crypto space that's kind of matching what used to be generated in the traditional space. But what's not quite there yet on either side are the tools or the capacity to synthesize or digest that data and give you something useful at the end of it.
Yeah, because you have a pile like this, and
Exactly.
you have no tools to actually go through it. Yeah.
Exactly. And the day that starts changing is the day we will start seeing not tougher regulations, but tougher actions under the AML rules or the CFT rules. Or you might find FATF implementing a new recommendation because some of the current stuff might not cover it. So I kind of see that as one direction as well. But I just wanted to add to that comment you made.
No, that's helpful. So clearly regulation an important part of the puzzle, but not the only answer to everything. And a focus more perhaps on the collaboration enforcement when it comes to
indeed.
regulators and supervisors as well. Very good. I mean, Ivan, do you want to maybe bring back? I know you're not in the part of the commission that works on AML stuff, but we talked a little bit earlier about kind of making sure the international rules join up and the work streams that the international standard setters do. Equivalence is a European term in terms of trying to think about how a European regime interacts with others. How do you and your colleagues in the Commission see the state of play in other jurisdictions, both in terms of where they are with their regimes as regulation and legislation, but also this kind of collaboration and enforcement collaboration, with supervisors, national common authorities, European level, but then also globally? Are there some lessons that we can draw already from existing collaborations, and how can we maybe move that forward? And then maybe I'll come back to Lex afterwards just to give some examples that we talked about earlier in the corridor around, the work that you're doing with some of the public sector organizations as well.
Yeah, thanks. True. My expertise doesn't really lie in AML, but on the CASP side, and I think it's very useful. I mean, that the kind of regulation of crypto assets was considered, in the kind of existing international fora from the get-go, and then you immediately had, the right experts that could kind of debate these things and agree on, what are the sensible minimal standards, and then I suppose the lesson is yes, crypto is different, but it's not that different. I mean, ultimately, one of the kind of big problems in the early days of crypto was, failings in governance and frauds and things like that. I mean, those are the things that, obviously TradFi is very used to managing, and, so it would be only natural that the kind of standards that kind of, cover crypto asset markets look like, similar standards like, that you have for TradFi markets. Get your governance in place, separate client assets from your assets and things like that. So I think, those were kind of the early lessons that could be drawn quite easily. Now, as you have more regimes coming online, and we also look at what's happening in other jurisdictions, you kind of start thinking about, well, how does this interoperate? Because it is true that these markets are global, stablecoins circulate across borders, yet, we are now, jurisdictions are coming up with their kind of flavors of regulation, which have a lot of commonalities. Everyone wants a robust reserve. Everyone wants, the issuer to be a kind of regulated, regulated organization with some kind of governance standards, things like that. But then, the devil is in the details, and then you got to deal with that. I think, going forward, there will be more work internationally, probably considering how these. I think that is actually like the big added value of these international fora, where we can sit down and see how these regimes can interoperate. Usually, there's a kind of a notion of an equivalence in your regime or a difference. Different jurisdictions call it differently, where you kind of say, well, okay, if this jurisdiction broadly regulates the thing that I regulate similarly, then I will defer to that jurisdiction. We currently, interestingly, don't have that in MiCA, an equivalence regime. MiCA was set up very early on. There weren't really any frameworks to deem equivalent. But I think going forward in the consultation is definitely one of the things that we'll ask about to get that, to consider how our regimes can better interoperate with other ones in the future.
Sorry, may I interject?
Please.
I got to say, okay, you're quite right that you don't have a MiCA equivalent in other parts of the world. But then again, when you apply for a MiCA license, you're not applying for every single activity anyway. You are applying for certain activities. So if you do apply and become a custodian, for example, there are other parts of the world where you can also be a custodian. So there could have been an equivalence through a more narrower scope rather than just, okay, nobody else in the world has a comprehensive MiCA, and so then that's it. So that would be kind of one industry comment I might want to make.
No, and I agree with you conceptually. I think just, it's always a piece of regulation is, I think, a reflection of a kind of political focus at the time. At that time, a lot of focus was around, what do we do with Libra and these stablecoins that are being set up, and how do we mitigate those risks?
Yes.
Maybe there wasn't that kind of foresight. 6 years down the road, we'll have a larger crypto market and stablecoins will pick up. And therefore, we might need to kind of interoperate. And I think, to be fair, it was a very kind of difficult thing to conceptualize at the time when we were drafting legislation. Sure, I mean, a custody service is similar maybe to another custody service, but you just didn't have anything to compare to kind of authoritatively say, okay, these are the standards we'll recognize it against.
Yeah.
Sorry, can I say one more thing, and then I'll definitely shut up. Fair.
It's a discussion, so it's good.
Fair point, very fair point. But then the thought that comes to my mind is, you do have ESMA issuing an opinion, taking from Brexit, and saying, well, if you want to continue to offer services within the European Union, you can't be kind of an empty shell. You need to have your substance here. You can't, have your base in the UK, but then offer services in the EU. And therefore, we're going to kind of take that concept, which was from MiFID II, doesn't exist in crypto world, and bring that into the crypto world. So why could you not have ESMA come up with an opinion allowing for some adequacy in that sense as well?
Because it's not for ESMA to do that. It needs to have a legal basis in a piece of legislation. This is why I say you need to have in the legislation saying, you can have an equivalence, and then ESMA can be a part of that process in issuing opinions. But if you don't have that, then it's difficult to do that. And we don't have that currently in MiCA. Going forward, it will be one thing that will be considered.
I think that's definitely one of the interesting things in terms of the kind of rules-based versus principles-based, and the point is a valid one in terms of how do you bring the value that you can get and some of the opportunities from the technology, but in a way that regulators and policymakers are comfortable that there's the safeguards and the guardrails there to be able to ensure basic things like investor protection, AML sanctions, screening, etc., etc. I'm conscious of the time. Anything else? We touched upon a few things there already. We didn't really talk about, kind of DeFi and some other things around permissionless versus permissioned blockchains, and kind of bridging, and how that whole world is going to develop and perhaps also take off, whether it's on the institutional side or on the retail side, and how that affects, kind of rules and regulations going forward. But before we kind of open up to the audience, are there any other comments that you want to react to anything that you've heard from?
I had a question for Rocío, if I may.
Great, please take my job. That's great.
I'm sorry, I didn't mean to.
It's fine, I'm joking.
But she made a very interesting, gave me a very interesting update just before we got onto the stage, which was about the acquisition of BANXA
exactly.
by OSL.
That's something that I forgot to mention. So we've been acquired by OSL in January this year. So we are now merging the teams. I have also colleagues here, like from OSL and BANXA. So yeah, I mean, it's good news, because we become a large company, and now we're gonna have like more licenses. And in terms of products, we're gonna offer like a variety of products, which they're gonna merge all together. So yeah, that's something, some news. That's a
excellent.
Good news.
Yeah, no, good to hear. And I think that's also been one of the challenges still, at least in Europe, kind of scaling, getting that scale, which is important, obviously, in a single market context, but then also globally. And back to the point I was trying to make earlier, that challenge of getting the balance right between different jurisdictions, which will each want to have their own rules and their own onshoring to a certain extent of some aspects, but how do you make that work in what is essentially global markets that are moving, hyper fast compared to kind of the way things have been done in the past. I'd like to give the panel an opportunity to have any final reflections or final comments, but I would like to, seeing as we're late in the day, would like to open it up. Are there any comments, questions, reflections from anybody in the audience? If you do, please state your name and who you're representing. And if you've got a question to anyone, particularly on the panelists, please let us know. Your chance to make comments on the global regulatory outlook.
Yeah.
turn this on.
Hi. Oh, okay.
Yep,
I think you can hear me. Hi, my name is Amanda. I represent Sciences Po, the school in France, on public policy and international relations. So I'm particularly interested in the regulatory landscape across the world. I'm a Chinese national, but have been based in Europe for the past almost 10 years and lived in the UAE for 3-4 years too. So across the entire Asia, Euro, landscape, I'm very interested and getting more interested in the blockchain industry too. When you guys mentioned that in the future that we're looking at comparing or maybe even integrating different regimes across region to get to potentially one day a international framework or policy framework, when do you think realistically that could happen? Or from where we're looking at, if EU is already starting with MiCA, where is the next geography that is likely to get more into the regulatory side of the industry? Thank you.
Thanks very much. Anyway,
I can do a little comment. I think one of the next markets that we'll see is actually Middle East. So the UAE, where you lived, they are launching their own stablecoin. Just right now, how do I know is because we sort of oversee the compliance and we work a lot with VARA, with HGM, with the National Bank of UAE, and generally the crypto business was very active in the UAE. I mean, the war that is going on right now is a little bit disruptive, but just a general push is still there. The goals didn't change. And just in general, I mean, the US, with the change of administration, might be different a little bit. We are present there working with certain public figures, and it feels like there's going to be a little bit more of a US MiCA type of thing. I mean, MiCA isn't that hard. I mean, if you simplify that a lot, right? So when I explain this to, I don't know, like my wife, what I do, and things like that, it's very simple. Like, imagine every exchange owner or fintech founder as this sort of knight with a sword and a shield, and it's going towards the treasure. The treasure is the clients and the growth and everything good that is happening in fintech. And then in the middle of the valley he needs to pass through, he picks up parasites. These are liquidity parasites. These are the people who want to give you dirty money and take a clean money from you. Like these are just all over you, And then at the end of the valley, he meets the dragon. That's the regulator. And what the industry people normally do, they don't look at the parasites like they don't have it, and they fight the dragon. They sort of, we have to resist, we have to form a community, we have to push our own agenda, we have to lobby or anything like that. Where in reality, and what MiCA asks you to do is be that knight, spot the parasites, feed the parasites to the dragon, and get the treasure. So you don't fight the dragon, you feed it with parasites. That's it. Like, this is what we do as a tool. We help you to spot the parasites and feed it to the dragon.
I think that's the best description I've heard. Gamification of MiCA. We should tell Peter that one.
Indeed.
Ivan. Just a reflection from my side. What I found super interesting in the Middle East is that, unlike the US or the EU, we have established systems and we have regulators and we try and kind of then place the rule book to fit what's already there. They kind of said, we don't have a regulator. Let's build something from scratch. So they didn't give it to the FCA like in the UK or SMOE, but they built a whole virtual assets regulator from scratch. And that is the kind of like the mindset that is, I think, in tune with a lot of the developing that's going on in the ecosystem. So that was a super interesting development out of there in that region. So thanks for the question. Any other questions? We've got a couple of minutes left. Yeah, please.
Hi, Jana, Queenswave Media. Yeah, I will stand up. So, in terms of regulation, regulation works differently for traditional finance and for fintechs. So, remember in the case Lex mentioned about 86-year-old lady who is moving $2 billion. In traditional finance, they have already certain procedures they have to run to then report potentially dangerous activities. I don't know, account activities. In fintechs under BANXA, that's basically what fintechs, for instance, or crypto companies have to do now. So what do you think would be more effective in terms of the implementation of regulation and basically fighting fraud and suspicious financial operations? Implementation of crypto into traditional finance, or basically more advanced development of fintech and crypto-related financial companies? Thank you.
I could probably take that one. Thank you for the question. Well, I guess there has been one change, as you mentioned, but at the same time, if you notice in the European Union at least, you have had entities licensed as a VASP or registered as a VASP. And when they were registered as a VASP, what applied to them was specifically the AML and CTF laws. So the same laws that apply to the bank, to the payment service provider, to the broker, to the forex company, that same law applied to the VASP as well. So they've been managing the same transactions. The difficulty came about when we had to try to fit the information in the traditional SAR and STR filings regime. So that was more kind of interoperability of the technical systems. But in terms of detecting it and the risk analysis, that was almost identical between TradFi and crypto. And MiCA doesn't change that. MiCA just says, in case you weren't doing it, well, not sure why, but in case you weren't, you might just lose this license now.
I think that's a very good point to finish on. Obviously, MiCA was a huge thing in the EU. Alongside that, often less loved, but equally important, perhaps more important, the DORA regime for digital operational resilience, which I think you touched upon as well in terms of AML. There are lots of licenses and regulations that are out there already. This is not an industry that wants to avoid that. We want to work in partnership with the regulators, ideally at global level, and hopefully we'll have that world, maybe not tomorrow in terms of one global rule book, but if we can continue the collaboration, I'm sure we'll make progress. So I'll end there. Thank you very much for your patience and staying with us till the end, and I hope you have the rest of a good time here in Paris. Thank you. Thanks to the panel, please.
Thank you.
Welcome to Signal Week.